Robinhood is not behind the stock market rally. Let's have a look. Hello everyone, Florian.Heise here, and I'm still finishing off my morning coffee, and I thought we'd have a look at this article from Yahoo Finance because it discusses Robinhood and makes the argument that it's not behind the rally. And if you don't know what I'm talking about, just have a look here. We can see the Nasdaq. Look at that climb. All-time highs of over 10,000. And then, of course, there was a correction and a little bounce back, but the first week in negative territory in quite some time. The Dow Jones as well shot all the way up. 27,000 with change, or even more. And then crashed right back down once again. And Robinhood, it's a free platform, a free retail trading platform with no actual trading fees. And one argument that has been made is that a lot of the retail traders are getting into Robinhood. Now, we don't have it here in Australia. I learned about it looking at the Wall Street Bets Reddit group and just watching some YouTube videos about the utterly crazy stories of Robinhood traders, just terrifying stuff what they're doing. And one example here, and this is an article we looked at before, was the example of Hertz, a bankrupt company whose share price crashed and then bounced back a little bit, but the amount of Robinhood holders of it shot up. So it's all the retail buyers who seem to think that everything they're seeing is good value, so they're jumping in. Is that what's driving up the Fed? Oh, sorry, I let the game slip. Is that what's driving up the rally, or is it the Fed printing money left, right, and center? I think we all know the answer to that. Let's see if they're mentioning it in this article. So unemployment may be at 13.3%, and maybe even up to 5 percentage points higher. Wow, that's high unemployment. But retail investors, the regular folk of the investing world, are jumping into the market, channeling their inner Warren Buffett to be greedy when others are fearful. Many narratives have emerged both on Wall Street and in the financial media that these new investors, using zero-cost brokerages like Robinhood to trade stocks, could be joining the Federal Reserve and the government's pandemic response in pushing the stock market up. But in a research note circulated to clients Friday, Barclays said, no, Robinhood is not behind the rally. Using the popular Robinhood database that offers insight on most popular positions and changes, analysts from Barclays Investment Sciences wrote that since March 2020, when the market bottomed out, stocks have generally done worse when Robinhood users get invested. Oh, hang on, or get interest. I need to have a shot of coffee. Let's just think on that. So is that a contrarian indicator? If Robinhood starts jumping in, then is it time to short it? We've seen the opposite of the conventional wisdom. All else equal, more Robinhood customers moving into a stock has corresponded to lower returns rather than higher, the analyst wrote. Well, there you go, guys. There's a way to measure it. Though the Robinhood user holdings of S&P 500 ETF jumped in line with the market gains, spikes in holding of those ETFs didn't correspond with spikes in the market. If there isn't a relationship between Robinhood activity and the overall market, what about individual stocks? It is undeniable that there are many examples of big stock gains coming along with big increases in Robinhood customer holdings. For example, Amazon has been a strong performer, gaining 45% since mid-March 2020 versus roughly flat for the S&P 500, the Barclays note said. But just because two things happen at the same time doesn't mean one causes the other. Furthermore, they wrote, low-performing stocks have also seen big bumps. COTY has been the worst performing name in the S&P 500 since mid-March 2020, but the number of Robinhood accounts that hold COTY has increased sixfold, a much bigger gain than that for Amazon, the note said. So, well, still many disagree. influential investor and billionaire Jeffrey Gundlach, speaking in an online presentation this week, said there was something unnerving that's going on in this rally, and it seemed to be driven by a lot of rampant speculation. Well, isn't that all that can drive this rally at the moment? No fundamental financial data isn't coming out. Maybe people are making a betting that certain businesses will perform well. Yes, Gundlach was talking about Robinhood. The Bond King brought up a chart from Robintrack data and pointed to the rise of accounts and activity linking to the pandemic lockdown, with a particular acceleration when the stimulus checks hit. Well, yeah, there were, apparently, this is what I've been reading, they could see the exact amount of the stimulus checks started appearing in people's Robinhood's accounts. The exact amount. You know, they'd get their government stimulus, they'd get that handout, and boom, they put it in their Robinhood. They put it in their Robinhood. And seriously, I had a look, try to see the Australian ASX bets. It wasn't as exciting as Wall Street's bets. Just some of the stories there that people try to do. To Gundlach, that this is an explanation, or at least part of one, to what's driving the market, especially in the big tech stocks, because money just isn't flowing from institutional investors. Well, here's the thing, guys. Here's the other point. You've got people like Steve Keen arguing for, giving $100,000 handouts to everyone, pretty much, to pay down their debt. Now, you're either going to have to force them to pay down their debt, or it'll wind up going on stuff like this on Robinhood. We saw it with the superannuation withdrawals as well. There were some people that gambled it away. Most of them didn't. The media jumps on those things. So you're always going to have some people. And probably the people that put their money on Robinhood, I bet you they didn't need it. How many people didn't need the handout? How many people didn't need the support? Someone just left a comment how he's got a colleague at work on 105 grand a year, but he's getting JobKeeper for him and his wife because their side business revenue is down. Does that seem like they need it? No, it doesn't, does it? Other market watchers, like analysts at Goldman Sachs, have highlighted surges in new accounts, noting the continued surge in retail investor trading activity has helped boost the growth stocks most popular with hedge funds. So even if we give all the money to little people, it may all wind up in the market anyway, and then it may help the big end of town who has the larger holdings. Maybe. Deutsche Bank's Praga That, who also looked at Robintrack data, mused that there seems to be a lot of evidence that retail investors are getting in on this rally, and like Gundlach says, saw flows markedly different for retail traders than other groups. In particular, Thistle noted that Robinhood accounts hold mega cap stocks. At least 200 billion market cap rose by 50% during the lockdown. And Robinhood is not Vanguard. The focus on Robinhood activity makes some sense given the company's role as a disruptor. It established free trades, making others do the same, and is pretty modern and millennial and mobile friendly. But does it deserve the constant call-outs in analysis notes? Well, that's an interesting question. Let's have a look at some of the comments here to the article. What's really propping up the market? The Federal Reserve. Well, there you go, right there. Number one. Good work, John. You got it. They haven't mentioned it much in the article. But yep, they went on a buying spree to purchase billions in corporate bonds to save corporate America. Mostly EFTs. In fact, BlackRock Incorporated recently came under scrutiny for its cozy relationship with the Federal Reserve, who has bought more stocks through them than any other asset manager firm of its type. 86 is saying, rise interest on savings so that anyone can make a measly 2.5% risk-free and see what happens to the markets. And Mark, I look at buying on these companies. No way individual investors can buy so many shares of these stocks. We're talking all the software costs, yada, yada, yada. So there you go, everyone. There you go. Apparently, Robinhood isn't to blame for this massive rally. We'll have to see. A lot of people are saying people don't want to hold stocks over the weekend. We'll have to see how the market opens on Monday. I was just too tired to do an opening on Friday. A live stream, we may do one on Monday for the New York exchange. Anyway, thank you all for watching. Are you a fan of Robinhood? What do you use as your investment tool? And is there a free alternative here in Australia? Let me know your thoughts and opinions, guys. Thanks for watching. Like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time.